Stocks rebounded today with a small gain coming off of a bad week, pretty rough week that we had. But we still are kind of at an inflection point. So I'm going to kind of show you that and what these charts look like, what our expectations are, what the results could be based on this inflection point, and how to jive our expectations with managing the risks of being able to move in either directions from this point. We'll talk about how to put those two things together in today's video. We'll talk about what's driving this price action. There's some major moves going on in some different asset classes and how that impacts our posture going into what typically has been a pretty bullish fourth quarter for stocks over long, obviously not last year, but over a long period of time. And we'll talk about, from a technical standpoint, why last year didn't fit the mold from being why it was so bearish. And then, of course, our trade idea of the day is a stock that appears to be breaking out, and we'll put in a trade that will fill as it does break out. So we'll talk about how to do that as well. Let's go ahead and get started. Today is Monday, September the 30th, 2019. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, well, let's start off taking a look at the S&P 500 on the market forecast chart. So the near-term picture here turned around today. So we had a nice little bounce back up from being below 50. So we're kind of fluctuating around the midpoint. You can almost say that this is kind of still the one full motion here, though we did have a bearish near-term high right there. It was lower. It was between 50 and 80. It was lower than the last one. But you can almost say that this was a bullish near-term high. Not as bullish because we did get slightly lower here, but it was between 20 and 50, and it bounced back up above 50 after spending only one day down there. So a better short-term picture. Of course, the posture is still falling. The intermediate line is still falling, so we're still light pink shading here, and we're still above a rising moving average, still green, and we're bouncing up. Now, you get through these highs here from the last 3 days of last week. That's a different story. Get it above this high, especially you can see again. That's that candle, that long candle. That's the high we really have to breach to say, okay, we're back. We're still on this bullish intermediate trend. But the nice thing is that we do have a yellow line here, which means that we're trading below our rising moving average. You take a look at the NASDAQ, same thing. It's still yellow. We're still below, even though, and a little bit of a Harami pattern as well, bullish reversal pattern. The near-term lines, you notice, haven't shifted up as much for these as it has, like, say, for the Dow. Industrials really did well today, but for the Dow as well as for the S&P, you can see it's still above a rising moving average there with light pink shading. And remember, again, light pink shading in a yellow line is typically a bullish pattern. You know, and obviously when the trend changes, that's always the precursor to a trend change. But a lot of times, light pink shading with the yellow, just like light green shading with the yellow line, is a really bearish pattern when you're on downward trend. So we'll see if that pattern plays out to be bullish or not, or if this is the first stage of a trend reversal. You know, considering the seasonality of the end of the quarter for multiple reasons we've talked about before, and especially considering that we're just barely starting. See, last quarter, typically the Q4s for sorry about that, and make sure my light comes back on. But if you take a look at last quarter Q4, it was really bearish. But you know, again, context in there. We went into the Q4 after having had a bullish run through a period that typically is not very bullish. So that precipitated a bearish Q4. But typically Q4s are pretty bullish. That's the seasonal trend. As you see, there's a few tweets I retweeted out today. So check out my Twitter feed at DavidSettle42 for that. But in this case, we're not at the end of a bullish trend heading into Q4. We're actually at the beginning of one, and with a little bit of a breather, at least as of right now, at the beginning of it. Remember, we were very close to a cluster. In fact, was it? I was going to say there's one of these is the S&P. I think that got really close to a cluster here. In fact, we did have a cluster on an intraday basis. I think it was actually on this day, and that's a good sign to get a cluster at the very beginning of an intermediate run, especially on the first near-term rally of that intermediate run. Near-term rally being when the blue line gets above 50 and stays above it. So, here, we've had, a little bit of a pause there. And again, is this near-term rally going to get above 80? And if it is, then you're going to have, this near-term intermediate pullback is going to be just like what we saw. Is this going to be just like what we saw here? A little bit of a bearish intermediate pullback, and we turn right back up. That's, the expectation here on this pullback. All right, before we look at some other charts, a reminder, subscribe to our YouTube channel. Mouse over our logo right here in the bottom right corner of your screen. Hit that red subscribe button that pops out. Also, hit the thumbs up icon that's down below this video. That lets us know that you liked the video today, and it's one click way to tell us that you want us to do the video again tomorrow. If that's the case, click that thumbs up. If that's not the case, then you don't have to click anything, right? But that's how we check to see what you're thinking about our videos. Of course, also down below, comment. What did you get out of the video today? Let us know any questions or comments you have about anything we discussed in the video, or for that matter, anything we didn't discuss in the video that obviously pertains to the topic of the day. Join our website, marketscholars.com. There's a link popping out right there that you can click on that will subscribe you to our site for free. You get access to our market commentary section in our blog, as well as our access to our Market Outlook forum. So make sure you do that. And then follow me on Twitter for more content in between these videos from day to day, and join our Market Outlook community that we've created on Facebook. All right, so I get asked all the time, can you talk about some trades, the trades that you talked about in previous videos and how they're doing and what you would do with them? I do that. I do that every time I do the Market Outlook video with this right here, the Market Outlook Live. That I go back through all the previous trades I've done in different Market Outlook videos, and I manage them all the way to the close. So if that's something that's interesting to you, and I assume it is because I get asked about it all the time, then that's where you can check it out. Again, that's available for all of our Plus and our Premium subscribers. If you want to check us out on monthly Plus subscription, there's a 30-day free trial. There's a link right here, right above the video. Also, our October calendar got released. So all of our Premium subscribers, and make sure you register for our classes for the month there. And then finally, we ask that we invite you to engage with us on social media. Really easy way to do that. Click this heart right here on today's Market Outlook tweet. You can hit that like button. Hit this image that likes the Market Outlook Facebook post for today. Again, the more you engage with us, the more Twitter and Facebook will put our timeline, our content at the top of your timeline. So you don't always have to be looking at it to see our stuff. If you're, when you come back to when you open up Twitter or you open up Facebook, the content you engage with the most comes automatically up to the top. So to make sure we're up there, engage with us. And so we try to make it really easy for you. All right, back to the charts. Let's take a look at the long-term view of the S&P 500. And again, very neutral candles so far. Now, granted, we are just barely starting here, the week. We're only one day in. But you can kind of see where, if we are going to go up and get a bullish candle here, we already have a little bit of a lower shadow. But if we are going to go up, we need to get up into this 3,000 plus area. Obviously, any move down would be a bearish candle and the beginnings of a bearish trend on this weekly chart. So that's something to keep an eye on. And we did have a transition candle. That's a red flag in terms of this current intermediate run that we're on. So keep an eye on that. Let's look at the 3 green arrow chart for the S&P 500. You see we still have the 2 red arrows. The histogram is red, but it's not and actually improved. So the histogram has turned back up today. A little bit of a positive momentum change there. If you look at the 2-line versions of this chart, you can see that the MACD has slowed down without dropping below 0, which is a good sign. The histogram, remember, measures the gap between these 2 lines, the MACD and its moving average. The MACD measures the gap between these 2 lines up here, the 8 and the 17. So the 8-day is still above the 17-day, as the price actually today. You can see the S&P 500 at one point in time had gotten back up above the 8-day moving average at the high of the day before falling back and pretty much closing at the 17-day. Of course, closing below these lows, and now, like we said Friday, 29.50, 29.25 come into play, and obviously that would be a bearish candle on the weekly chart. If we got down to that end of things, 29.25 would be down towards here, so that would be a bearish candle, and we'd expect more bearish candles to come from that. So whereas a bounce back up to 3,000 would start to get us more of a bullish candle again, and potentially a something like this, where instead of reversing to the downside, we continued to the upside and continued the trend with a higher high point. The top of these shadows is the actual highs of the week. So getting above the high of last week, 3,007, will be significant in that regard. All right, let's take a look now at the 4-week range. You can see we had a nice little gap up to the upside. We haven't filled that in yet. So there might be a little bit of weakness here tomorrow, potentially down towards this 295.50 area. So keep that in mind. If there's any weakness at the open tomorrow, that very well could be just a gap filling move to the downside. But you can also see, 298 is the important level. You break through 298, and then 300 is the next area that we'll get to. That's where our volume nodes are in the last 4 weeks. We're below. In fact, I would venture to guess that we have more volume in the last 4 weeks above us than we have below us, which means the path of least resistance is to the downside. So keep that in mind too, in terms of, we did move back into with, yet last Friday we broke out of the value area here, but then jumped right back up right before the end of the week, and then continued higher as we headed to, today into this volume area towards the point of control. So we're at a pretty important inflection point here in terms of whether or not we're going to get those bullish candles again on that weekly chart, or whether or not we'll get more of a bearish candle and reverse this bullish trend, this intermediate trend already, into a bearish intermediate trend, getting that intermediate line, the green line on the market forecast chart, back down below 50. The expectation, again, based on seasonal factors and a lot of other things, is that we will break through and move back up to the upside. We'll just have some headwinds in the meantime. But there's also the strong possibility with the red flags that are out there. So we can't ignore them. We have to keep them in mind. So we manage those expectations with these red flags with smaller bullish positions and a more balanced active trading portfolio. As most of you who are market scholars know, in our active trading classes, our portfolios are pretty balanced right now in terms of positive to neutral. I think we have a small positive delta, but we have plenty of trades on both sides of the market here because of the fact that we're at this inflection point. And our bullish trades definitely are smaller, considering the risks that we have to the upside right now. All right, now let's take a look here at the volume today. So let's go, not the market forecast, sorry, this one, 4D, and we'll go to SPY. All right, you can see the volume today at 52.5 million and the range at 1.63 points, no gap. No gap on SPY. Well, a little bit of a gap, but you can see we almost filled it in. Let's see, the close here was 295.40. The low was 295.92. So you had about 50 cents of a gap. So you have to add 50, so a little more than 2 points on the total range when you include that. And our average is 3 points. So remember, I talked about on Friday, that is a bullish range, right? You want to see the volume at 52 million is below the average. The range here, just over 2 points, is below the average. Those lines come down and stay down. That's typical bullish moves. We want to avoid the 4+ point moves like we saw here yesterday or Friday. We want to avoid the volume more in the 100 million area. I think we had a little bit above average last time, but we want to avoid those 100 million shares volumes because those numbers, while not extreme, bring the averages up, right? If you get an extreme, that tends to be a 1 day, that's it. Like this move here was such an extreme in volume and range that set the low point, and we kind of meandered around there for a while, but then it turned around. So you get the extreme, that's one story. But if you get the strong up and down days that are in these kind of above average levels, that's bearish, right? When these lines go up, it usually coincides with declines in the market. And then finally, let's take a look at the volatility index here. And you can see volatility did drop throughout the day. We came down to the bottom end of the neutral zone after peaking Friday right before the close at the top end of the neutral area. So, of course, breaking back below 90, and below 15 would be the sign that, okay, this intermediate trend is back on, right? We're the red flags, and this being one of them, right? The red flags that are out there, have gone away, and now we're back on that bullish trend. We are still on the bullish trend, but these red flags are coming up, and this being one, right? We would prefer to be below 90% even on the pullbacks. But we're also not too high either. This is not a trend-changing red flag yet. Breaking above 95, that's the concern, right? That's when you get more of the at the best, an intermediate pullback, right? At the worst, you surge above 105%, and you get surge above 115%, and that's when you get the this idea that we're going to be bearish for a while. We'll probably end up having more of a market sentiment pullback. Okay, let's pause now and just summarize our technical outlook, and then we'll look at different intermarket relationships and what's driving the price action today, as well as our trade idea for the day. Remember, we do put our trade ideas on before the market closes during that Market Outlook Live video at 3:30 Eastern Time. So we've already put the trade idea on, but I'll discuss it here at the end of the video. But to summarize our technical outlook, the posture is bullish. The expectation is that we'll continue to be bullish. We are obviously in the midst of a pullback right now. We are at an inflection point as to whether that pullback will be more significant or not. So there's good opportunity here that we can bounce off of these lows and start working our way back up to the upside. There will be some headwinds on up. It won't be clear sailing to the upside, but there's also a lot of headwinds above us, which means the path of least resistance in the short term is to the downside, which, if it plays out that way, leads to a stronger intermediate pullback, and that can change our expectations. So keep that in mind, and we balance that expectation with those increasing red flags, with still trading according to our bias, but managing the risks with how we trade it. How bullish are we? How big our bullish positions are? Things like that. So what do you think? Do you agree with that assessment? Do you disagree? I'd love to see your vote. Click that link right there. It's popping out in the top right corner of your screen. It opens up a poll where you can vote, agree or disagree. If you click disagree, comment down below in the comment section on what you're seeing that would suggest something different than what we came up with our daily routine here. All right, now let's take a look at what's driving the price action here. And you can see that we have, what happened today. We had one big outlier to the downside. So it's a little surprising stocks were able to maintain gains with an almost 3% drop in crude oil. And you can see gold down 1.5% because you had a strong rally in the dollar. Let's take a look at the dollar index here. And we talked about that on Friday, and we have been talking about that a lot lately. That the dollar is really breaking out here, and it's broken above 99. It's broke, now getting closer to 99.5. It's really pulling away from the moving average. It tends to find some short-term resistance when it gets this, far away, as you can see on the chart. Plenty of examples of that. Who knows? That usually it kind of ends in the short term with long upper shadows. So we'll see if that ends up being the case, or some kind of reversal pattern, like you see here. So. We'll still note that this is definitely not a reversal pattern yet. So there still might be some upside bullishness, but you can see what's happening, why gold is dropping. Gold has been such a strong performer as the market was trying to price in, a recession essentially, and now gold is pulling back. In fact, you've got dark red line, dark pink shading, and you actually have a oversold cluster here. Now, that doesn't mean we'll automatically bounce back up. We got one over here. We had been bearish for a while by the time we got that one. If I were to go back a little bit further for some context on other opportunities for oversold clusters. So let's go back to the previous kind of clustering of. We had been bearish for quite a while, but the first one occurred right at the very beginning, and that led to a lot more bearishness. And so, we'll keep our eyes on that. You can see, we had one at the beginning here too, and we had a little short-term bottom, but it led to more bearishness that ultimately culminated in those. You can kind of see a sideways action here. And here we had a bullish move, some clusters that led to quite a bit of short-term or quite a bit of bearishness. So the concern here is we've been so bullish. Now we got an oversold cluster that's starting a bearish trend. In the past, that's led to a lot more bearishness in gold. Obviously, that coincides with it would coincide with a continued move to the upside in the dollar. Now, crude oil also dropped today, and crude oil will be pressured by a rising dollar. It doesn't have to go down, but you can see it's in the midst of a bearish pattern right now. Dark pink shading, red line, bearish short-term sentiment. No cluster, but you can kind of see how it's in fact, it's still kind of in. If I were to zoom out here for some context, we've had this bullish move, and then we had the retracement down to the 62% level. It ended in those clusters at support, and then we've kind of stayed. The dotted lines being this dotted line here is the here, let's make it the same. The dotted line is the bigger retracement area. So we're kind of flirting with the top end of that bigger retracement area, and there's that Saudi Arabia, the attacks on Saudi Arabia oil fields. We've really dropped back down into the middle of that retracement zone, the 38 to 62% retracement zone. Again, getting down into the lower half of that zone and below, obviously would be bearish for commodities as well. That typically doesn't coincide with a bullish market. So if we end up having a pretty strong Q4, like we seasonally have, that could lead to some bullishness with crude. If you take a look at its own seasonality, and this is a 5-year. Let's go. It was heavily influenced by last year. Let's go over to a longer time frame. You can kind of see that the seasonality for crude, despite the bullishness in stocks, is to maintain some bearishness. Usually it's bullish in the beginning half of the year and then bearish in the back half of the year. Let's see. Let's take a look at the prices percentage here. And you can kind of see how we end up, on average over the last 20 years, we end up with about a 12.25% gain by the middle of the year in crude, and then end up pretty flat by the end of the year. If you take a look at here, let's go back to those 20 years, and then let's look at a yearly chart. Here, let's get rid of the seasonality and go back to standard, and then go to 20-year chart, and then go to a yearly chart. So here's our last 20 years, and not all of them have been so neutral. You can see it's some up years. You can see some pretty neutral years in there, and some up and some down, up and then some down. So they end up flattening out. And here's our current up year with a long upper shadow, which means that we're in the midst of the pull, and lots of long upper shadows that suggest that we get the pullbacks towards the end of the year, and we are in the midst of that pullback right now. That's not a good sign for energy stocks. All right, now let's take a look at what's driving. You can see energy really struggling, or not what's driving, the sector performance. And you can see energy is just really getting beaten up, of course, with the drop in crude oil and the potential weakness there. And energy has been, from a year-to-date standpoint, here, energy has been the worst performer of the year. Healthcare right along with it. They're up, but they're up really weakly. And you can see on the flip side, technology stocks have been the best performer. It's been the case for most of this year that technology has been the best performer of the quarter. So, but you can also see real estate and utilities maintain some strength, and utility. It's been recent, but they've really kind of rallied off of their lows to go from underperformance in the case of utilities here to being now an outperformer. But you can also see the discretionary and communication services, and then on the flip side of the equation, like I said, energy, materials, those are dollar-sensitive areas lagging behind. Financials lagging behind too. But if I go back to just today alone here, and let's go to September again. Just today alone, you can see that there are three: energy, technology, not so much communication services, but those two led the way higher. Healthcare, materials up as well. Remember, those are a couple laggards. But technology and discretionary, two of the three were our best performers, and that's what you want to see, right? Financials will struggle with any kind of link to yields. Financials will struggle with that, but and industrials too can lag or beat, But if we're going to be bullish, we really need technology and discretionary to beat. And so far this week, they're off to a good start. Healthcare had a good move today. Remains to be, we did a trade in the market outlook a while back in AbbVie, and that's, in fact, Brandon and I both did a trade in market outlook day after day for different reasons, different trades. AbbVie is kind of one of those stocks that's in that healthcare sector is doing really, really well. Materials also up today, even with a weakness in gold prices. But you can see utilities, real estate, staples lagging. That's what you want to lag, right? You want them to lag if the market's going to be bullish. All right, so for our trade idea of the day, it's in the industrial area, and I want to take a look at Deere. Deere is a stock actually I've been looking at here in a class for a bearish trade, but it's instead of holding kind of resistance in this 165 area, we've had a nice little breakout. That doesn't mean that we're necessarily going to break out here. That's why you see this red line as we put the trade in today. I'll show you what I did here in a second. But you can see how we got strong bullish posture, dark green shading, dark green line. If you take a look at the 5-year chart, you can also see the same thing. Now you don't see the green line here, the moving average. Here, let me just see if I can pull it on there. There you can see on the 5-year chart that you have the dark green shading, the dark green lines. So even on the weekly chart, you've got the bullish market forecast pattern. If you take a look at the 3 green arrow chart, same thing. Here, let's pull up the Deere. You got one red arrow, so a little bit of a pullback on the histogram. Let me show you what that looks like on the 2-line version of the stock, and you can see, MACD is still pretty high, and that you've had a little bit of a drop in momentum. You expect that to bounce. So you can see we're pulling away now from the 8-day moving average. You expect that histogram to turn up. It won't get that high, most likely. It'll probably get kind of flirt around. When it's up this high, it will kind of flirt around and won't get too significant back up, because the MACD is already so high. So it's going to be hard for it to pull too far away, which is what makes the histogram go up. We're also pretty far up above the 30-day moving average. But we got a nice good, you can even see on the 1040 cross, we've got a good crossover here, good bullish Hakinegashi patterns. So we're set pretty much it's a high probability bullish setup. If you take a look at the Bollinger Bands, the Bollinger Bands are telling you that in fact we're breaking above the point of control and breaking above the value area. That's kind of what stood out to me in today's charts. You look at its Ichimoku cloud and trend strength indicators. It's it's a moderately strong trend, making its way up to what would be a bullish trend. Obviously, well above the Ichimoku cloud and above its Tenkan line as well. What was the other indicator here? The Keltner channels was one that we've talked about before in previous classes, and you can see how we're breaking back above the Keltner channels, and that tends to be pretty bullish. So you see the stop limit order there. Then why do I have the stop limit order? Well, it's because if I were to sell the 165 and buy the 160, then my credit's well more than the 30% return on risk that I need. And so by putting in a 125, because there's a relatively wide spread, if I put my credit at 125 and put a stop limit there, then what that means is I won't get filled into this trade until we continue to move to the upside, until we really kind of sustain this breakout move above. Let's go back to the Bollinger Bands here, above this 170.5 level. So we essentially need to get up above these highs. Now there's some resistance here, but the volume profile tells you there's not very much volume. So we essentially have to clear, whatever little volume there is above the value area to trigger an entry into a bullish trade. And then again, we're selling the 165, so we have a very significant volume node right at the support to help hold us up above the support level. And considering that we don't have earnings till after November expiration, we can position size up to a normal position on this because of the event risk. We don't have that event risk. So it's a way, using a stop limit order helped us avoid, like I put it in as we were at the point of control at that volume node, thinking, okay, this volume node's going to act as a resistance. We'll roll to the downside. So I put the stop limit order on the bearish trade to make sure that we do break down to the downside, which we didn't. So I canceled that order. And now, because we're breaking out, I'm pulling in a stop limit order to make sure that we sustain this breakout to the upside before I get filled in. All right, that does us for today. You've heard from me now. Now I want to hear from you. Use that link right there, popping out in the top right corner of your screen, to go to our Market Outlook forums. Open up any new thread with any questions or comments you have about today's video. Of course, you can always reply or respond to anybody else's thread with other market scholars to keep this conversation going on the Market Outlook and anything related to it. As always, thank you very much for watching. Remember to subscribe to our YouTube channel, hit that thumbs up icon, and comment on our video down below. Follow me on Twitter for more content in between these videos. Join our Market Outlook Facebook group, and have a great rest of your evening. All right, we'll see you guys all tomorrow.